My name is Brad Nickel. I'm President and CEO of Edge Resources. Edge is primarily about two things in the natural gas market. The first is that our strategy is to go after as much natural gas property as we possibly can at this low point in the cycle. The second unique part of the strategy is that it's very low risk, it's very low cost, and the results that we achieve are second to none at this point in the industry. Some of the things that we do differently: we employ very unique, very differentiated fracturing techniques. We map geologically these sands differently than anybody else does. And we have a completely different philosophy when it comes to cost and overhead and cost structure. At this point in the natural gas cycle, which is a very low point in the natural gas cycle, one of the things that we found is that the deals that are available, that is land deals, asset deals, or even corporate deals, are extremely low cost. It's a perfect time to enter the natural gas market at this low point in the natural gas cycle. The philosophy that came with setting a company up at sub $2 an MCF gas was that we employed this philosophy of low cost. That's permeated the company in all kinds of different areas, from operational costs to capital costs to even overhead and the way that we run the company on a day-to-day basis. This company is profitable at less than $2 an MCF. So one of the key components of the strategy to take advantage of this natural gas environment is that we are actively pursuing natural gas properties. We're focusing specifically on the Edmonton Sands, which is a shallow gas zone situated primarily in central Alberta. The Edmonton Sands is a group of shallow formations, in some cases up to 15 different formations within this same group, between depths of about 300 meters and up to maybe 1,000 meters. The primary sandbox of the Edmonton Sands is located in central Alberta. It's about 50 to 80 kilometers west of Red Deer, and it runs about 50 to 100 kilometers north and south. This area in central Alberta is some of the oldest oil field and natural gas in Alberta. So a lot of the rights are already held by some of the bigger companies. One of the only ways to really access this property is through farming in on some of the land held by these bigger companies. Edge Resources already owns about 20 sections of land in this sweet spot in the Edmonton Sands. We've signed contracts that allow us to farm in on another 30 sections of land that will allow us to earn a total of 50 sections of land just today. We see a runway of about another 150 to 200 sections of land that may be available in this Edmonton Sands sweet spot. We feel, because of our reputation, both operationally and technically, that we've proven ourselves to be the Edmonton Sands experts. And companies are now approaching us to come and farm in on their lands and drill up their Edmonton Sands rights. We earn the land typically through farm-in agreements with some of these bigger companies. What we've seen in the past, when gas prices were actually a lot higher, is the terms of those deals required a double-digit, often 20% overriding royalty that goes to the company that's farming out to us. What we've seen in this market, when natural gas prices are lower, is that the farm-in terms have dropped significantly down to single digits in a lot of cases. The farm-in deals that the company is signing today require that the company drills one well to earn one section of land. We can drill up to 4 wells per section, so that leaves another 3 wells on every section that we earn that can be drilled in the future, either by us or by a potential acquirer. Every year, a Canadian public oil and gas company is required to have an independent engineering evaluation done on the reserves in that company. In 2010, Edge's average per well evaluation came out at an NPV of $1.5 million. That's $1.5 million of value on average for every well that we drill. Today, we have contracts signed that will allow us to earn up to 50 sections, which means we can drill 50 wells. Beyond that 50 sections, we see an opportunity to acquire up to another 150 to 200 sections of land, over and above what we've already earned or what we've already signed in contracts. On those 200 sections of land, we have the ability to drill again up to another 4 wells per section. That's 800 wells in total. We have a 100% success rate in drilling so far. We have significantly higher than average production rates per well, and we have significantly higher than average reserves per well. I think all junior oil and gas companies have some element of risk. The difference with Edge is that, number one, we've already achieved a significant level of production. Number two, we're building on a rock-solid reputation. We are being approached by companies to come and perform the Edmonton Sands work on their lands for them. Number three, we've got a significant runway ahead of us. There is a lot of room to keep drilling, to keep expanding on our success, and while it doesn't eliminate all the risk, it definitely eliminates some of the risk and definitely sets us apart from a lot of the other juniors out there. There are a few reasons to invest in natural gas right now. One of them is because it's at the low point of the cycle. The deals that are available today are being done at unheard of terms. The window of opportunity is open in natural gas today, and it's going to close soon. One of the reasons to invest in Edge Resources today versus other natural gas players is because we set this company up at a time when natural gas prices were really low. That meant we went into the game prepared to handle and be profitable at a really low price. Other natural gas companies that have legacy assets require much higher gas prices just to break even. Edge's break even at less than $2 an MCF. If the gas price goes up, the upside goes up with it. The company's made a lot of progress. We're flowing significant volumes of natural gas, and we're cash flow positive even at today's gas price. The runway ahead of us is huge, and as we implement our strategy on that runway, we're going to create significant amounts of shareholder value.